Welcome to Prediction Market Prof, where we analyse global affairs through the lens of prediction markets. Today's lesson, how not to lose all your money trading prediction markets. Because prediction markets might look simple, yes or no, up or down, democracy, but with fewer principles and more transaction fees. But if you're new to polymarket, kalshi, or any of these platforms really, there are 5 classic mistakes that can absolutely murder your portfolio. So let's go through them. Mistake number 1, ignoring volume. This is a big one. You buy a position, it moves in your favor, your screen says you're up 200% and you feel like George Soros with Wi-Fi. Then you try to sell and suddenly, somehow, despite being up 200%, selling your position would actually lose your money. Welcome to low volume markets. In prediction markets, the price you see is not always the price you can actually exit at. If nobody wants to buy your shares, your paper profit is meaningless. So before entering a trade, check the volume, check the order book. You can do that. You can see if people are there as exit liquidity. Because being right is nice, but being able to sell is better. So the next mistake is not checking whether yes or no add up to roughly $1. In other words, ignoring the spread. In a clean market, yes might be 45 cents and no might be 56 cents. That's $1.01 total. Fine, 1 cent spread. Nobody's thrilled, but will survive. But sometimes yes is 48 and no is 68. That's $1.14. That extra 14 cents is a 14% spread. That's the price of entering and exit the trade, and it's the market's vampire bite. A spread of 1 or 2 cents is fine, but more than that, and you'd better have a very good reason for taking the trade. If you pay too much spread, you're not investing in prediction markets, you're donating to market makers. Mistake number 3 is not reading the rules. This is the cardinal sin. Read the rules. Not the title, not the vibe, not the tweet that sent the market vertical, but the rules. Prediction markets are often designed to sound obvious. Will the AI bubble burst by year end? You think, yes, obviously. Half these companies have no revenue and somehow $1 trillion valuation. This is pets.com with better GPUs. But then you open the fine print. And it turns out the market only resolves yes if the Nasdaq falls 70%, Nvidia goes bankrupt, 3 named AI companies cancel IPOs, Sam Altman cries on CNBC, and ChatGPT personally apologizes for the Industrial Revolution. The title tells you the story, the rules tell you the trade, and the rules are what decide whether you get paid. Mistake number 4 is confusing announcements with reality. There's a lot of announcement markets on Polymarket and Kalshi, and these don't correspond with what actually happens in real life. This one's especially important in the current political environment because there's a massive difference between X happens and Donald Trump announces that X has happened. Those are not the same thing. You might think there's no way the Iran conflict is actually ending tomorrow, and you might be right. But the market might not ask whether the war actually ends. It might ask whether Trump announces that hostilities have ended. And Trump can basically announce anything he likes, and pretty much does. He could stand in front of a burning oil refinery and declare, peace has broken out, tremendous peace, the most beautiful fire anyone has ever seen. So always check whether the market resolves based on actual events, official announcements, media reporting, government statements, or some very specific wording. In prediction markets, reality doesn't pay you, the rules do. And finally, mistake number 5. Losing your private key. This is the boring crypto bit, but it's only boring until you lose all your money. Polymarket runs on Polygon, which is a crypto network. Now, I'm not a crypto expert. I have no idea how blockchain technology works or anything like that, but I do know that your private key matters. Your private key isn't just a password. It's your username, password, bank card, house keys, and spare liver all rolled into one terrifying string of characters. Lose it, and you may lose access to your funds. Now, that might only be a couple of $100s, and that might not be the end of the world, but it might be millions of dollars. And basically, if you share it, or if someone else takes it, you're not going to be all that happy. There's no friendly bank manager called Susan who can reset your account because you clicked on a dodgy link at 2 a.m. There's basically no help at all. So write it down by hand, keep it somewhere safe. Don't put it in a random Google Doc called Polymarket secret key very important. Don't screenshot it on your phone. Don't send it to someone claiming to be official support with a profile picture of a bored monkey. Private key means private. That's the whole clue. So, those are the big 5 mistakes. That's not enough for you to make money in prediction markets, but it'll certainly slow your losses. Keep your eye open for the next in the series, 5 kinds of winning prediction market trade that might help you actually make some money. If you enjoy this content, please like and subscribe to Prediction Market Prof. If you've made any mistakes not mentioned here, beyond just making poor predictions, please add them in the comments below and I'll mention them in future videos. Maybe you guys can save me a few bucks too. Thanks for watching and I'll see you on the next one.